Christycole in Lagos, I'm intrigued by the goings-on at the Nigerian Stock Exchange. Only 10 stockbrokers responsible for more than 50% of the volume traded and more than 70% of the total transactions in February of this year. Meanwhile, the Central Bank of Nigeria declaring the nation's banks are sound. The retailers, on the other hand, are feeling the pinch of the devaluation of the local currency, the Naira. What's happening there?
Yes, true that. The CBN governor has emphasized over and over again that the Naira is in a good place. Although the closure of the Aridas window has been considered a technical devaluation of the Naira, the official statement from the CBN is still that the Naira is in a happy place. Also, having passed the central bank's stress tests, the banks have also been declared to be in a good place. But definitely the realities on ground conflict the CBN's position on the banks sharply, as the Naira and retailers and consumers who should be the beneficiaries of such a sound system continue to feel the harsh realities of a more expensive dollar. In Lagos, for instance, we've seen sharp drop in stock levels and shelf inventory, as inventory buildup was reported to have slowed by 25% as of February 2015 compared with the 2014 figures of the same period. Smaller retailers are feeling more of the effect of the Naira devaluation, and consumers definitely have to pay more, leading to repricing of shelf goods. I personally noticed an increase of about 25%. Now, increase in price of shelf goods are naturally followed by a consumer resistance, which is definitely not good for business.
Well, let's move a bit further west from Nigeria to Ghana. Barely 2 weeks after getting its IMF deal, reports are out Ghana will be issuing a Eurobond of $1 billion before the end of the year. With fears of austerity measures the IMF deal brings, though, with its 3-year plan, should Ghana be getting into more debts, Christycole?
Yes, Ghana's finance minister Seth Terkpa says Ghana will issue a 10-year maturity Eurobond of $1 billion before the end of the year to repay part of its debt that will mature come 2017. Recall that in September 2014, Ghana lifted $1 billion through a Eurobond with a coupon much lower than analysts actually expected. The rate of that Eurobond stood at 8.125%, which of course is a largely rated performance for Ghana, whose currency, the CD, fell 31% last year. Although Ghana's GDP grew by about 7.5% over the past decade, its growth is expected to slow down in 2015 as the government is struggling to contain inflation, the budget deficit and the debt to GDP ratio. Now, although Ghana is still criticized largely by some of its local experts for the $930 million IMF deal it backed about 2 weeks ago to stabilize its economy, especially with concerns about the austerity measures that would follow the IMF deal, its finance minister has announced that the Eurobond is the next direction in a line of strategies to revamp the economy.
Well, that takes us to the trivia of the week, and we also get to hear about the favorite stocks of Christycole and Bonnie. They are normally bullish about the banking sector. Stay with Africa Business News. Which stock, Bonnie and Christycole, would you advise me to invest in if I had $10,000 to invest? Let's start with you, Christycole.
Today, I'm going for FCMB for 3 reasons. One, despite its rally, it is still considered as being oversold. Its recovery performance is not fully reflective in its share price, which is now 2 Naira 60 kobo from 2 Naira 10 kobo about 2 weeks ago. Now, the icing on the cake is because of its capital buffer, it is expected to pay some good dividend before the end of the year.
How about you, Bonnie, in Nairobi?
Well, my stock today will be Equity Bank. They've just released their numbers, 18% increase in pre-tax profit. They've had a fantastic rally. The price is at 52 shillings a share. They're up 2.97. Why would I spend my money elsewhere?
You love your banks, Christycole and Bonnie. Thank you very much for that stock pick. We're back next week with more Africa Business News. We thank Christycole Popoola out of Lagos, Bonnie Tunya in Nairobi, and earlier on we had Ritesh Anand here in studio. Until next week, adios.